Hello, I'm Ryan McEachern, and welcome to our special budget preview edition of MSTA Canada The Dig. In this three-part series, we are discussing the upcoming federal budget and the impact it may have on the exploration and mining sector. Today is part 3 of our three-part series with special guest Jeff Killeen, Director of Policy and Programs from the Prospectors and Developers Association of Canada. In part 1, we spoke with Ian London, Executive Director from the Canadian Critical Minerals and Metals Alliance, about the importance of Canada having a broader industrial strategy. And in part 2, we spoke to Brendan Marshall from the Mining Association of Canada about the importance of government investment in infrastructure to drive the supply of critical minerals. Today, we're speaking with Jeff Killeen about how commodity prices have increased and financings have surged recently, but are they aligned with the critical minerals and electric battery themes? Also, what can we expect from the federal budget in regards to supporting the discovery and development of critical minerals? Let's dig in now with Jeff Killeen. Hi, Jeff. Welcome to The Dig.
Good afternoon. Thanks for having me. Very nice to see you.
Yeah. So, Monday's coming up. We have the big federal budget to be announced. And I think our industry and our ecosystem is kind of sitting there with bated breath about what it can be, considering all the themes that are being talked about, critical minerals being one of them. But, in terms of, the Prospector Developers Association Canada's mandates, commodity prices and financing are kind of two key components to driving the engine of exploration and discovery. So what are you seeing in those two kind of aspects?
Sure. It's certainly been an interesting couple of years, and 2020 was an interesting one from looking at the commodity price dynamics. We saw precious metals again leading the way to a degree for the last couple of years, and that's bucked a trend that we've seen over the last decade. But with that in mind, we did see a number of other metals really surging ahead last year. Copper, iron ore, zinc all had really good performance over the course of the year, and that really affected the way financings were occurring through the sector. Certainly last year was a nice rebound year with respect to investment into the industry. We saw a real rebound with respect to price or with respect to money raised in Canada, whether it be the TSX or the venture exchange. I think we're looking at that trend continuing into 2021. Just in the first 2 months alone, we've already seen $2.3 billion in equity raised on the two exchanges here in Canada, TSX and TSXV, through January and February, and that would be a number that would be similar to sort of a mid-year number in some of the weaker years we've seen. So, it's nice to see those commodity prices, the surge in those prices is really helping out the investment side of this industry. And with that being said, though, it's certainly we're seeing a lot of the deals being done looking towards the precious metals, as I kind of alluded to at the beginning. And gold really taking a center stage here with respect to investor interest, and a lot of the financings being done are being done in that gold sector. So that's going to have implications for what this year looks like with respect to activity. It's going to have implications for what exploration is happening in Canada. I think if we look at Enercan's numbers, they usually do a pretty close job at monitoring exploration activity in Canada. We're seeing gold likely taking 70% of the exploration dollars being spent in the country this year that's going into the ground. So as much as there's certainly more of a focus, more holistically from focusing on critical minerals, there's certainly more attention being drawn towards the battery metals and battery minerals. The commodity activity, the commodity pricing activity last year, and the financing investment activity really suggests that the precious metals are really a focus for the investors, and probably going to be the benefactor for what we saw over the last year.
Right. And so that kind of speaks to, I guess, a question I was going to have for you, Jeff, is, were we seeing, you kind of answered it, were we seeing an alignment with this dialogue on critical minerals and battery electric minerals and the financings? But it seems we're still heavily weighted in that traditional precious metal surge that we saw. Is there any glimmer or indication that there might be a rebalancing in the future for that attention for dollars to critical minerals and such?
Well, it's important to recognize that there has been, as you've noted, this tangible shift in the way that governments talk, the way that the public talks about critical minerals. The fact that critical minerals is a phrase that people are using in 2021 is an important thing to recognize, and it does show that there is a real focus or a change in focus of industry towards some, atypical areas of the marketplace. We certainly see the government of Canada putting a lot more effort or a lot more focus themselves on critical minerals in Canada and how they can bolster that supply chain and where the government activity could take place to benefit industry and really help accelerate some of those pockets of industry that have been lagging in Canada for a number of years. So, as much as it's nice to see an overall increase in metal prices leading to an increase in investment, it's not necessarily going to directly draw into those corners of the marketplace that are critical minerals or electric battery minerals. So, we certainly are happy to see the government take more of an effort with respect to putting policy efforts together, putting policy designs together, and really making a plan around how they can bolster industry in Canada. But there are many steps that are going to have to be taken. I mean, to put it simply, when we think about the overall investment arc for, say, a precious metals deposit, the return for the investor, the prospect for a return on investment is a much shorter time frame typically than if we're looking at something in the base metals or in the critical minerals type of domain. And so that plays a huge factor on where the market's interest lies and where activity really is spurred when we see commodity prices run like we have in this last year. So there are going to be real efforts have to be taken to bolster infrastructure in Canada with respect to roadways, with respect to telecommunications, with respect to energy and alternative energies. Otherwise, it's going to be a challenge for us in Canada really to take advantage of some of this stronger marketplace with respect to electric vehicles, with respect to battery technologies, and be able to fill in that gap that we may have in our industry today.
Well, and you've mentioned a few things there. One of them, back in what you had just said, with the government's focus on, we saw, last fall, Elon Musk saying, we want more nickel, produce more nickel. We had Mark Selby, I believe, from Canadian Nickel on, kind of talking to that. We've seen actually Tesla or Elon Musk now investing. Mind you, they went to Indonesia with their first investment, but we're seeing certain companies kind of moving up the value chain. We're hearing about BMW doing it too. So it'll be interesting to see who the new investors are, because this is a high risk environment. I think what the ratio you use is it 10,000 or 1,000 properties for one discovery, or it's in that kind of range. That ratio still holds to a rule of thumb, isn't it?
Yeah, I mean, that's a fair point to make, Ryan, that about 1 in 10,000 mineral showings turn into an advanced stage exploration project, and only about 1 in 1,000 of those actually becomes a mine in the future. So, the overall odds of success in the industry are challenging, even in the best case scenario. So, with that in mind, the ways you can improve the likelihood for success in industry is to have things like infrastructure to be able to accelerate the pace of your activity, to be able to reduce the overall cost of operation, and it increases that prospect for success, and it shortens that timeline for a return on investment as well. So if we look at it through that simple lens, things like bolstering infrastructure in Canada will be very meaningful to help really get over the gap in terms of making that investment more likely and making some of these deposits that may be, let's call them to a degree abandoned in Canada because they're sitting in remote areas, make them more likely to become into the production scheme. And that, as that scenario plays out, that's where Canada can really take advantage of things like we do with respect to being best in class from an operating standpoint, from really focusing in on things with respect to responsibility and sustainability in industry, with really focusing on things with respect to engagement, ensuring we have a social license to operate. I mean, all of those things that we do in Canada and as an industry in Canada, they are real hallmarks, they are benefits, and as much as we can get over some of the challenges we have with just the fact that we're a huge country, and access can be a challenge, and that has cost implications. The better off we'll be, and that will really take us to where we need to be from an industry leading standpoint on some of these less or more atypical minerals and metals.
Right, and kind of that word access, what I think makes unique to us in Canada too, from an infrastructure standpoint, it's not just the revitalization of existing infrastructure, it's the development of new infrastructure to areas. As you said, I believe the Mining Association of Canada a while back had put a discussion or a white paper together that showed that 100 kilometers away from infrastructure, the costs of developing these are 2.5 times more a deposit into a mine. And there's a lot of discussion. You hear it on podcasts right now, and there's this assumption. They just say, oh, well, we have the minerals and we host them, but it's like a lot has to go into making this happen. And so with that part, what else is, I guess, access to capital is another piece, but what are some of the main recommendations that PDAC is looking to advocate for the industry?
Great question. And you mentioned, or we've been talking about infrastructure here for a few minutes, and you mentioned some of those numbers produced by the Mining Association of Canada. We would echo that from an exploration standpoint as well. If you think of drilling on the side of a highway on an advanced stage project versus 25 to 50 kilometers away from a road and needing helicopter support, you're certainly looking at 2.5 times the cost, and arguably it's going to be a much bigger differential. Maybe it's 10 times the operating cost to be in a remote location. So, what are we thinking about as an association? How can we help the industry accelerate that overall pace of discovery and bringing things to market? Well, certainly incentives are one great way to do it. Certainly, bolstering infrastructure in Canada is a great way to do it. So that's really where some of our recommendations are focused on right now. We're very happy to see, we understand the federal government has been looking at infrastructure through slightly different lenses than they have before, understanding that things like mineral and mine development in remote regions can bring different types of benefits than typical infrastructure or typical economic development. So therefore, a different lens should be used to assess the value of infrastructure in remote regions that may help industry succeed and may help industry to develop. And so with that in mind, I think those steps need to continue. We're going to continue to recommend to the federal government that, infrastructure needs to be viewed in different ways to see what benefits it can bring. We certainly know our industry is, in a few ways, really beneficial to remote parts of Canada. I mean, for the simple point that an exploration project and every dollar spent in exploration can lead to 2 to 3 times the regional benefit for an economy. There's real legs to the idea that our industry can help kickstart, reignite this economy on the back of the COVID-19 pandemic, that it can in particular help remote parts of the country rekindle their own regional economies. So when we think about what we're asking government, the mineral exploration tax credit is very important to us. The flow-through share regime is very important to industry in Canada. At least 60 cents out of every dollar raised for exploration in Canada comes through a flow-through share or through the METC, the Mineral Exploration Tax Credit. So one thing we've asked the federal government for in this upcoming budget is to consider expanding that mineral exploration tax credit. This is an incentive that is, extremely low cost for the government. It's not something they'll have to spend dollars on to effect. It's one that's going to potentially help, critical mineral projects that are in remote regions have a much more reasonable cost perspective from an investor to help accelerate those types of investments, to help accelerate those types of projects. And it can certainly help kickstart grassroots exploration in Canada. So, a very low cost way on an incentive that already exists, expanding it to help to see, more exploration activity and help rekindle regional parts of the country's economy. We think that's a real simple way to go forward. But beyond that, as I mentioned, thinking about infrastructure in different ways, whether that's alternative energy, whether that's providing, again, other types of relief for people that are working in remote areas and don't have alternative energy and are reliant on things like diesel fuel. Those are things the government will have to think about to make sure that the competitiveness of our industry is maintained and that the goals that they've set out in things like the Action Plan for Critical Minerals or the Canadian Minerals and Metals Plan will be realizable.
Well, it really speaks to the opportunities and how quickly we can expand just on our own our own kind of focus within the exploration and mining industry, but it has huge ripple effects in the whole value chain up and downstream. And so exciting times ahead, I think, for our sector, considering all the dialogue going on with electric batteries and critical minerals. And so it'll be very interesting to see what we hear on Monday. And Jeff, I really want to thank you for taking the time to speak to us here on The Dig today.
Well, thank you very much for having me, Ryan, and best of luck.
Yeah, likewise. Take care. Stay safe. Thank you, Jeff, for joining us on part 3 of our special budget preview edition of The Dig. If you missed the other episodes to this series, please visit and subscribe to our YouTube channel. Next week on The Dig, we will get post-budget analysis from Peter Hall, Chief Economist from Export Development Canada. This will be an episode you won't want to miss. Until then, I'm Ryan McEachern. Take care and stay safe.